Hi, today is Monday 24th, and this is the weekly recap for the current trades. It's going to be short because I actually did very little last week. As you can see, this is the June trade, and if I show my trade log, I actually did nothing since the 13th. So this trade is on its way out. I may be a little bit prematurely risked off this trade by dropping some of the lower combos. Now we have maybe a narrower range, but still cover from 3800 to 4450, so that's still pretty good. The SPX outlook suggests a trading range, so I'm happy with the way it is. I am only using 11.5k reg T, so it's still fine. There's no pressure to peel it off, even though after 28 days, now 25, we are entering the descent phase where I start reallocating. August trade will be in a week and a half, so really easy peasy when it comes to capital allocation. No rush to peel off this trade. This trade will reach, if I keep it to expiration, about $900. And as I've mentioned in previous videos, I'm running a large portfolio margin account with a slight leverage, about 1.25. So it's going to be about $10 to $1,100 per tranche. So that's this trade is absolutely fine. Of course, I will monitor my gamma now. My delta is still flat. Theta is not that great because, of course, I've got little in the market, and it's a side effect of gamma. If I want to protect my gamma, I will reduce my theta. So I would anticipate this trade will do okay in the next week, and probably nothing much to do. I've been thinking of dropping this lower combo, and if I drop this balanced butterfly here, I would get a little bit more positive delta. So if the market grinds up again, I will drop them just to feel a little bit of flattish to slightly positive delta, and it will also give me a little bit of credit. So that the easiest scenario would be the market stabilizing where it is, or even grinding up a little. In terms of the VIX Q, I don't have any trouble. The trough is around 43.50 now, so that's pretty fine. And in the next couple of weeks, it will accelerate towards the money. So on this trade, little peel off only if necessary. Maybe a little bit of tuning to simplify the trade as I usually do. I tune my delta at the same time while I reduce capital usage, but really probably nothing to do, at least not in the first half of the week. If we look at July, because I've seen on the VIX term structure that risk or concern or nervousness has been pushed down the road a little bit, but I think a deeper retracement. We've tested twice the 40.50, 40.60. So at the moment, I'm happy to see my delta build up a little bit and get more cover and more resilience on the downside. Delta will build up. So if 40.50 breaks, I would be in a better shape now. So I don't feel it's necessary to add risk to the trade. Of course, it's slightly undercapitalized at 14.5k. I've been thinking and hesitating about adding an iron condor. An IC is generally easier to boost a trade later. I mean, if I'm kind of slow in the build-up phase or the takeoff phase, the first 2 to 3 weeks after inception, if I want to get to my profit target, instead of going the broken butterfly route with or without an additional CCS, I sometimes go for an IC. If the market drops, as you can see, I've started spreading my Vega risk. So the SPX VIX correlation is pretty good at the moment. So I would say I would be tempted to keep a lower target around $400, which is about 1% with leverage. It's going to be 1.25, 1.3. I have a slightly higher leverage on this trade, and maybe leave the trade as it is. and hope to get into what we sometimes call the sweet spot if the market retraces, but only in 2 to 3 weeks. Otherwise, yes, I may go for a fairly safe IC. Maybe not an IC placed on the upper longs, but maybe slightly lower, around 37, 3800. It will still provide me about $2 here, maybe almost $1 here. I would get to $700 profit target, which is good, and that should not impact too much this scenario. For example, if I go for something, for an additional IC here, you see I would get 740. I would still get majority of my Vega on the upside. As I said, at the moment we have a good SPX VIX correlation, so I wouldn't mind having some negative delta. The trough is a little higher here. It's probably 40, 50. So it will take more time for the trough to move towards the money, but that's fine for the time being. So either I go for this or I wait a little bit longer. So it looks like I won't be doing much, especially in this fairly comfortable trading range around 40.50 to 42.20. The trade will not do fantastically, but it's also easy to manage. And let's not forget that in my particular case, where I handle a large number of Bergman butterflies, I try also to slow down on adjustments, because it's sometimes difficult to fill 60 to 100 butterflies at the same time. It also depends on the strikes. If I have to send an order for 100 butterflies, I would definitely try and get strikes in multiples of 50 or 100. Anyway, this is a technical detail for larger accounts. Okay, so that is it for now. This, as I said, there's not much to do. It's pretty cool. Today we will have probably a slow day again, because a number of European countries are having a public holiday. So I'll see you on Slack, but probably with more regular updates as of tomorrow. Thank you for watching, and bye for now.